Good morning and welcome, Patriot Radio News Hour on this Wednesday. It is a hump day, the 4th day of January. Joe and Jason coming at you today. Another rally in gold. Listen, I don't know what else to tell you. If you want to pay more, keep waiting, I guess. That's just simple. If you want to pay more for your gold, keep waiting. We are in this whole situation where just think about 2022 to 2023. 2022 was the year of the dollar rally, one of the biggest single year gains in history of the dollar. Now, it all had to do with, it wasn't because of great economic data, right? Because that's what you would want, right? This was one of those, oh no, that transitory inflation thing didn't happen and we were raising rates. Now we're on the other side of it, and rate hikes are slowing down. They're going to come to an end. I've got an update on that as well. Neil Kashkari, the Minneapolis Fed, was out today. Very, very, very important because it's going along the lines of what Jason and I have been talking about. So I'll just tell you it's simple. If you want to pay more for your gold and you want to pay more for your silver, then wait. Just wait, because you're going to end up paying more. 800-951-0592. We have a contest winner. So remember, before the new year, we wanted you to put a guess in at the London close on Thursday. Man, and it was tight. I got to tell you, some pretty good guessers out there. Wallace Carter, you are the winner. Jason, he missed it by 10 cents.
Yeah, you told me that this morning. It was that was quite impressive. I mean, that's a good guess. I mean, I think I was I guess a little higher than him, and I think I should have did the end of the year guess, because I think it went up a little bit more on Friday, didn't it?
Yeah. Well, Friday would have changed everything. Friday, you could have looked like a hero on Friday, but let me tell you how fast things have changed. So here we are on Wednesday. Gold's up $18 more again today, 1864. By the way, so I'm going to give you some numbers. You know how I like to tell you. 1878. We break 1878. That means 1900. There's 1900 is psychological number, really not a true number. 1910, and then Jason, really, I think we're going to be starting to talk about $2,000 gold and then record high gold to go along with it.
Yeah, the last few years, early in the year, we had some sort of emergency going on in the first couple of months. So there's probably a lot of people waiting and looking around to see if something's going to happen, because I'll tell you that if anything weird happens in January or February, Joe, and it could just be the Fed that could trigger the markets, because there's a lot of looky-loo, there's a lot of deer in the headlights going on right now. People trying to figure out what to do, and it just takes a little bit of the wrong type of news, and suddenly everyone piles into gold, and there's just not a big space for a lot of people to pile into, Joe, and that's why you get the sharp ups and downs of gold and silver, and we're looking at an uptick here in 2023.
Yeah, and eerily quiet on retail sales. I haven't heard anything. At least by now, you're starting to hear about traffic or Visa, MasterCard. I haven't heard a lot, which I would say probably not a great sign. Salesforce, they had the biggest layoff announcement so far. Of course, we're only a couple days into this year. They're going to lay off 10% of their workforce. They're also going to close several offices throughout the country. I think this is, Jason, really, jobs are going to be very, very important as to how many more rate hikes we're going to get. But like I said, Neil Kashkari was out today. You know how the Fed likes to do it now, right? They all go on TV. They act like they're all important. Let me ask you this. If your target was 2%, and then you spent a year telling us it was transitory, then you said, oh, well, maybe that wasn't the right word, and you admit that inflation, what was their high watermark? Almost 9. Now they're saying it's still 7. I mean, if you were like a football, well, let's look at the Broncos and the Cardinals, right? The Broncos, they didn't even wait for the season to get over. Hey, coach, you're out, right? Cliff Kingsbury, he's probably out, right? People get fired for this kind of stuff, and yet somehow they keep running them out on TV, acting like these guys are some kind of geniuses and know something that we don't.
I know, Joe, and I get the feeling the CPI number is next week. I have a feeling it'll be lower again, and then they'll make the decision on where to set the rates for February. But I think we're going to see, and just like Michael Burry and a few others have talked about, that you every time you have these inflationary cycles, Joe, they kind of calm down and people kind of think it's over. Almost every time you have a spike in inflation, there's a double spike, and sometimes there's more than 2. So I think I think they know this, Joe. I think they know they're going to try to tap dance and claim victory when the inflation comes down a little bit, and then it's going to come roaring back, Joe. And we'll see how the markets react. If the markets believe that all this is calming down and getting better, then we may see the markets kind of relax and be happy for a little bit. But this year, during this calendar year, the inflation will come back. It'll be very hot.
Well, I'm going to say this: when we get back from we're coming up on a break. We're going to break down Neil Kashkari because he gave his prediction as to where he thinks interest rates are going to go. And then he also talked about, and we're starting to hear the words, right? Oh, maybe we'll take a pause. Mm-hmm. Pause. That's another word for stop, isn't it? Right? Yeah. Mm-hmm. Patriot Radio News Hour. Boy, you better get your gold and silver put away. We'll be back after the break. 800-951-0592. The Dow's up 100 points. The S&P's up 25. The Nasdaq's up 57. Gold's up almost 20. Let's call it $19 here. $18.65 in change. Silver just went back into positive territory. $24.25. Of course, this market update brought to you our friends at YRefi, all of you accredited investors out there. I'm telling you, you don't want to be a part of this volatility. You don't want to be a part. Listen, the Federal Reserve, they proved one thing. They don't know anything is what they proved. Common sense has left the building when it comes to these guys. If they haven't read it in a textbook or seen it on a spreadsheet, they have no idea what's going on. High fixed rates of returns, no matter what they do, no matter what the interest rates are, no matter what Wall Street does, it's not tied to Wall Street whatsoever. This all has to do with the distressed private student loan market. These banks loaded up these kids and their parents and grandparents with these horrible student loans, and then the second they missed a payment, they just threw them in the garbage, right? They threw them in the garbage. These guys, YRefi, they're able to help, and they're also able to get you the best rates of return up in as much as 10.25%. There's no fees. It's compounded daily. You can do what you want with the interest. You can use the interest as income. You can keep rolling it over. There is no penalties for early withdrawal. Invest YRefi.com. That's the word invest, the letter Y, REFY.com, or 888 YRefi24, 888 YRefi24. Let them know that Joe and Jason sent you. And Jason, it really is interesting as we're watching, gold and silver really get that shine going as the dollar. And we've been talking about this. We had a great dollar rally last year. Jason and I are saying, hey, we're going to have the exact opposite this year because it didn't rally because the United States was so great, that the economy was so great, right? It rallied because, well, let's face it, it rallied because the Fed printed way too much money, and, of course, all the COVID policy. Neil Kashkari was out today. So Here's where he's at as of this morning. 50 basis points in February, 50 basis points in March. That would put the Fed funds rate between 5.25 and 5.5, where Neil Kashkari says, hey, 5.4, which is about where it will be in March. And then he wants to pause, Jason. He wants to call time out. I'll say this. This is, again, remember a few weeks ago, I sped up my timeline. I said, hey, I think they're going to raise, the last rate hike would be in May. And I said, you know what? Scratch that. I'm moving it to March. And Jason, you're a little more pessimistic. You think they could be done in February?
I think it's a quarter point next month, and then they stop. That's just what I see. Because I think the CPI numbers are going to get better the next couple of months, and they're going to start tap dancing, and Biden's going to talk about how great everything is, and then it's going to come back. I don't know when it comes back. When it comes back, it's going to come back hard. And I do want to say one thing, Joe, about the dollar rally. I was looking at the gold prices from last year. The gold rally is only because it was rallying against other currencies. I mean, gold did end up going up last year. Okay, so the dollar didn't rally against gold; it just rallied against other currencies. So dollar strength, Joe, maybe it stays strong against other currencies. What I want to really keep watching, and what we're interested in, is how weak it gets against gold, against real things. Because that's what the inflation is telling us. The inflation is telling us that the dollar was really weak last year, Joe. Because look at the inflation. The inflation tells you the dollar is weak. It's just stronger than the other fiat currencies.
You bring up a great point. A near record year as far as a dollar rally. Gold should have gotten hammered if things were right. The fact of the matter is, and gold would go, hey, listen, it wasn't straight lines and this and that, but gold essentially finished right where it started, up a few bucks for the year, despite that record rally. And this is why, when Jason and I, we don't just throw things out and say, oh, hey, we expect one of these years in gold, we expect a huge increase in price in gold, in silver, in platinum. All three of those metals, we are anticipating very, very big moves. And Jason, a big part of it is because despite the record year the dollar had last year, gold was right there. Silver was right there. And this year, look at Neil Kashkari. He's already saying, listen, I'm ready to pause in March. This is how fast this timeline's being moved up, Jason.
2011 for a lot of gold buyers that have owned gold for a long time, that you point at that as well. It spiked. It was high there, and then took a while to get back there because it came back down. But the average closing day value of gold in 2011 was $1,573. 2022 was the first year, Joe, that the average daily closing price was above $1,800. So for a so-called bad year or a sideways year for gold, 2021 it closed. The average closing price was $1,798.89. But last year was $1,801 and 87 cents. We're only a couple of days into this year, but our average closing price now is $1,839 this year. It's getting better every year.
We're already $1,865 right now, right? That's going to push that number higher. And again, I think it's something very simple here at play. Here's what we know. The Federal Reserve is slowing down the pace. You now have them coming out on TV and talking about pauses, right? This is how they do it, right? They like to deliver these messages to the market, and let's face it, they're not dumb. This is going to allow Wall Street to stay higher than it should, because Wall Street's going to say, well, you know what? Hey, they're almost done raising rates. And why do I get the feeling, Jason, a bunch of people on Wall Street think the way Jason thinks and says, hey, you know what? February is probably it. It's going to be interesting. We'll know more when we get that jobs number that was, I'm assuming, I know it's a holiday week, but we should get that jobs number on Friday. It's going to be interesting what that number looks like. and then we're going to have to start tracking layoffs. And then we haven't heard from the retailers yet as to how Christmas really was. And I think that's going to have a big factor. But already you've got people saying, hey, maybe we're going to be taking a timeout here in March. And whether it's February or March, Jason, that's moving up the timeline. That's really saying to gold and to silver, hey, you guys got a lot of room to run here.
And those jobs numbers, I keep saying, Joe, I think those numbers are just skewed. They're just not telling the story correctly because coronavirus and all the job losses, and then the markets crashed and came right back. And then you had all the supply line problems. And then the war in Ukraine started last year about this time. All of these things, the jobs numbers got kind of weird, Joe. And I think that it's hard to get the jobs numbers lower because all these people that were just not working because of the free money they got, I think they're slowly getting back into they're getting the really low end jobs and just doing what they can to be in the job market because they don't have that free money coming in. So I think it's going to take a while, Joe. And I think it's going to be hard for the Fed to figure out what to do. And I think that's why the pause. I think that's why the pause and a pause coming soon is something they really favor in doing. And they want to sit and watch. I think they want to sit and watch. And I could see rates stop where they're at, Joe, and never go down the rest of the year. I could see them not lower the rates, or if they do, maybe the end of the year when things get really crazy.
Well, and it's interesting. Kashkari did mention his fear would be that inflation comes back. To your point earlier, hey, you know what? We've read the same articles Joe and Jason have read. We know this is kind of standard operating procedure because I'll say this: in the wintertime, it's when gas is the cheapest, the energy gets a little cheaper, and you can kind of get a feeling that, hey, maybe this is over. And then usually what happens is come spring and when school gets out in May, all of a sudden you see all these prices ramp back up again.
Yeah, but I don't see it stopping, Joe. So I think you're right, and they're going to. I think they're going to act like they got control and they're being successful. But sometime this year, you'll see the inflation's not. Here's the first thing is the inflation's not stopping. Just because there's less of a price raise doesn't mean it's not bad. Let's say we even get it down into the 5s this year, the CPI. That's still really bad. But I see it climb.
Well, that would put us over 20% for 3 years.
Yeah, 20% for 3 years.
And let's face it, that's their inflation number, which actually doesn't even track inflation.
Correct. And then I think what we're going to see, Joe, is if that, let's just say we get into, I don't know, August, July, August, September, and it would say the CPI starts going back up. What I think happens is they stay paused. I don't think they raise the rates, Joe. That's what I think is going to happen. I think they're going to keep it right where it's at and just stay there. I think they want to stay here for the whole year. I think they're trying to be very careful on where they're stepping. And by the way, the Fed, everything the Fed said they're going to do, when they say they're going to do something, the last couple of years, they've been doing exactly what they said they were going to do. There's no lying and no deceptions, except for when they use terms like transitory, when they make predictive things.
Yeah, they're not very good at predicting anything. But to Jay's point, I think it's 50 basis points in February, unless we get some really, really bad news in the next couple of weeks. I think 50's a done deal. I think after that meeting, you're going to hear people talk about 25. You're going to hear more talk about pausing housing. Due to the holiday, this was a 2-week. Normally we get mortgage applications weekly. This was 2 weeks. Applications to purchase homes fell another 12.2%. Jason, I've been predicting, don't be surprised to see applications down 50%. This was by the way, I just want to make sure that I've got the right month here. Yeah, so 42% now decline in applications to purchase a home year over year. By the way, this December number ended the year at the lowest level since 1996. So housing taking another big step back. I actually think the January number, Jason, I think we're going to see a 50% decline in mortgage applications. It's absolutely incredible.
Yeah, and I don't think it's not because of a shortage of or too many houses being built, Joe. We have it. I think we still have a housing shortage. It's just the prices, Joe. It's just the inflation. I mean, if you have trouble buying the simple things in life, just day to day, how are you going to go buy a house? And so, yeah, it's too expensive, and the inflation's roaring too hard. I don't see how housing. I don't know about the prices, Joe, but as far as buying houses, it's only the people that are trading houses. Hey, I got equity, I'm moving. Those are the only people doing the housing market, Joe. I bet that the number we need to look at is the first time buyers. That's probably going to be lowest in history, probably here pretty soon.
That's going to be an interesting number. I think you're probably right. And again, it's these interest rates. Kashkari saying, listen, add another percent, right? So right now we're at 4.25 to 4.5. He wants to be at 5.25 to 5.5 over the next 10 weeks here. And again, I know the 10-year note is only at 3.7. But okay, now it's 4.7, right? If it stays this far under, you're still looking at adding hundreds of more dollars to those mortgage payments here in the next 10 weeks.
And that makes people not want to buy them, Joe. That's all there is to it. It's a tough place for first-time home buyers to be in, Joe.
We got a huge silver sale coming up next. Get ready to dial. We'll be right back. (800-951-0592). Joe and Jason, Patriot Radio News Hour. Really quickly, $20 gold pieces. If you're looking to add to your gold, if you want to pay more, keep waiting. They're at $2,115 today. $2,115. But Jason, I really think, we talked a lot about premiums, especially over the last several years with COVID. Premiums on gold and silver reached all-time record highs. The gold premiums really came in nicely. Matter of fact, I would say gold's probably priced just about right for where it is right now. Talk about almost $1,900 gold, and you're picking up $20 gold at $2,115. That's pretty good. That's normal. Silver, which has just exploded in premiums, the cheapest premium now that I've seen since COVID started. So we've got two different deals. They're both spectacular. Let's start with the less expensive one. This is that fractional. This is for you preppers out there. This is for you people out there that are like, hey, I know what's going to happen with that digital currency, and they're going to start restricting what I can buy, and I'm gonna need something to trade for things that I want to get out there. Rolls of silver dimes. So you get 50 silver dimes, and remember, our currency used to be gold and silver. We had silver in our dimes, quarters, and half dollars all the way up until 1965. In 1965, they took it out. They left some silver in the half dollars for a few years, but it just really they were devaluing the money back then to where it just didn't make sense to have it be. But a roll of 50 pre-1965 silver dimes, they're $110. That is $12.50 lower than yesterday. And yet silver's up 4 or 5 cents today. A huge opportunity. You're talking about buying silver here, U.S. government hallmark silver for a little over $6 over spot. That's a huge improvement. And then U.S. Silver Eagles. Jason, this is the lowest price. I think we're the lowest in the country as far as the people that I go out on the big internet guys and all that. Right now, $730 for a roll of U.S. Silver Eagles. That is a decrease of $50 a roll from yesterday as these premiums have come in. This is just incredible. You couldn't buy a roll of Silver Eagles for $730 when silver was $18, Jason. It's now $24.30.
Yeah, and I'm always trying to see what's rigged about everything, right? And with these premiums coming down, Joe, this is just me. You know, we had those stories last year of billionaire Walmart people buying tons of Silver Eagles to where the U.S. Mint couldn't keep up on it. The premiums were high. If the premiums keep dropping, as Joe's talking about, I think this is basically your indication that these prices on gold and silver that they're going to be over with, because when the biggest players get done buying, and I think what's happened here, Joe, and this is just my conspiratorial mind at work, those higher premiums scare all the smaller buyers out of the market for a long time. Yeah. Now the premiums are coming down. It makes me think that, well, a lot of the governments or the banks, the central banks, the big players that wanted to buy a bunch, I think they've seated themselves squarely in a good position in gold and silver. You lower the premium, you let the smaller players in.
They want to drive demand. They want to drive demand. Listen, it's classic. Correct. This is classic here. They want demand now. Listen, they bought it all. They bought it for dirt cheap. Now they want the demand to come back into this market, overwhelm the market, drive up these spot prices. You know, you've got people, really smart people. You know, when you got a guy like Robert Kiyosaki talking about $100 silver, and oh, by the way, in 10 years, he's not ruling out $500 silver, right? When Jason and I are talking about, hey, silver's going to start with a 3 in 2023. Those are big statements to make because, listen, we're sitting here, we're on the front edge of all of this, and I think Jason's nailed it exactly. These guys filled up their vaults. They wanted to prevent you guys from running the price last year, and then really over the last several years, they filled up. Now, Jason, they want the price to run.
Well, and there's another angle, Joe. You got to think, well, if you're a big time buyer, why would you want to buy it with the premium so high? Well, if you know where it's going in price, the premiums don't matter too much. But it really helps when the premiums are high if you're a big buyer, because there's only so much of it. No matter how big of a buyer you are, if you can't get it, you can't get it. So you want to make sure you're first in line, so to speak. I think, if you've ever been in a long line at the DMV waiting for your driver's license, all the big players, all the big buyers, they're finally out of line. You're getting close to your chance to buy in. Don't wait, like Joe said, because it seems to be climbing every day right now, and we don't know what the next false emergency or thing that's going to happen in the news cycle, and suddenly it goes really fast. We don't know if the market starts crashing. We have a day where the market's down 2,000 points a day for 3 days in a row. Things of this nature can happen, and suddenly you're jumping in at the wrong time. Better to be a year early than 1 day late when things start moving. So it looks like it's happening, Joe. It really does look like it's getting ready to happen.
Listen, what a great opportunity. Silver has moved up $6. That's insane, right? I mean, it's moved up almost 30%. And yet I'm telling you, you can buy it today for less than you could $6 ago. This is back the truck up. If you've been waiting for an entry point into the silver market, this is the day. Silver dimes at $110. Silver Eagles at $730 at 800-951-0592. I've got 2 lines open. I'm looking at our phone lines here. There's 2 lines open. If somehow you get the voicemail, hang up, just keep trying. If you do leave a message, believe me, the girls will check them. They'll get back to you. But today is the day. 800-951-0592. And Jason, I just love the action right now because I think it's setting up just the way you said it. Hey, the big guys that have dominated this market, controlled this market, they've loaded up, and now they're going to sit back and watch the price run.
Yeah, and it doesn't hurt them that if there's some supply out there and the premiums coming down, they can continue to keep adding to their portfolios during this, Joe.
800-951-0592. Jason and I, we're coming right back after the break. Eight 800-951-0592. I just had a line open up here. Get in. Today's a great day to do it. Gold's up 20, 1866. Silver's up 11, making 12 cents now, 24.35. Platinum's up again. It's only up $1 or $2, but up again as well. Big sales here. $20 gold, $2,115. If you want to pay more, I'm okay with that. I'll sell it to you. Just wait a little while. We'll sell it to you for more. Silver. Nice drop in premium today. Rolls of silver dimes at $110. Rolls of silver eagles. This one is a great $730. Jason, we're talking about this. These are prices that were less than when silver was at $18.
Right. Yeah. It's it's a funny thing about margins. How much something costs. It's like when you go to the store, Joe, right? And it says, "Oh, it's on sale. It's sale price," right? And is it really on sale? They gotta, it has to be advertised that it's on sale. Well, when it comes to what we're doing here, it's simply we buy it at a certain price, we sell it at a certain price. These premiums being higher is because the paper markets were not reflecting what the physical market needed to sell it for. It's kind of a nice to see higher premiums, just because it shows that the physical market is pushing the paper around a little bit. I don't mind it too much. To me, it's just how many ounces do you have? You need to stock up on it, because ounces of gold and silver in relationship to other things kind of stays stable. You want to talk about stable currency. Stable currencies are things. Things have the same value in relationship to each other. Gold and silver being one of the best ones for storing value is why we do what we do. So get as many ounces as you can get your hands on, stock up, and this is how you save for your future and build your own. What do you say? Be your own banker, right, Jack or Joe? Be your own banker.
Be your own central banker. I got two things I want to point out. Russia today announcing big changes in their sovereign wealth fund. Previously, Russia had 20% limit on gold in their sovereign wealth fund and a 30% limit for the Chinese renminbi. They've revised that now. 40% limit for gold, 60% limit for renminbi. Jason, I think that's a clear indicator. Russia knows Saudi Arabia and China are getting closer and closer to dealing with oil in renminbi. This is another big catalyst for gold and silver. Russia obviously has been a large player in the gold market. China begrudgingly admitted, okay, yeah, we're buying gold too, right? Now we're gonna probably I don't want to. I don't know, but if you're putting a gun to my head, China's lying about how much gold they have by a lot. I think they own a lot more gold than what would they say they do. Listen, we still don't know. They still haven't fessed up, Jason, to remember last quarter record central bank buying, and yet they 300 tons of gold is quote unquote. Well, we don't know who bought it. Mystery buyer.
Yes, Joe. That's. I remember we talking about that.
I got a pretty good idea who the mystery buyer is. And then here's the other thing. So think about the last big run in gold. We had a run there at the financial crisis. We had a bigger run in gold during the 70s, right? This all the way through 1980. We had this huge run, and something happened today that has not happened since 1974, 1975. The ISM manufacturing sector has now declined for the 9th straight month in a row. Jason, that is the longest consecutive declines going back to the mid-70s. And, we started the show talking about inflation and all these things. Now, by itself, hey, that's just one thing to look at, but shouldn't be shocking. These comparisons to the 70s, I think we're going to see a lot more of those happening in 2023.
Yeah, I said it a little bit earlier that how well gold did versus the dollar. You were talking about the renminbi and trying to push the dollar on the playing field, so to speak. The dollar didn't do well; it just did better than the other currencies. You're talking about inflation back in the 70s and 80s. I mean, the average selling price of gold in 1980, that was a high year. It was $614. 1973 it was under 100. We're seeing the same sort of situation, Joe, and I understand and I like the fact that you're seeing that the dollar had this huge year last year and gold did just fine. I mean, if any kind of pushing for the renminbi comes to fruition, I don't know if the dollar can be replaced. I don't know if it will ever be replaced. I think it'll be a basket of currencies that'll be the reserve currency in the future with a digital type of money. But regardless, it's going to put pressure on the dollar. I don't think the dollar does as well this year. I think it stays strong versus other currencies. But if gold keeps getting stronger when the dollar is strong, that just shows you how bad all these currencies are. All these currencies are bad, all of them. Just because the dollar is doing better, that doesn't mean that it's showing you that, Joe, if there was a fire in a building, some people are going to get out right away and be safe, and some people it's going to take them a little longer to get out. Well, the dollar is just doing better than the other guys. They're getting out of the smoking room a little faster. And these small currencies, I mean, look how bad some of these small currencies are doing. Gold is at record highs all over the world except for America. Well, that's because the dollar did better versus other currencies, but gold still went up versus the dollar. So, Joe, it's sitting there begging you to buy it. That's really where we're at. The good old days, right, Joe? That this place where gold and silver is at, this is over with. It's any day now that these higher prices are going to come setting in, Joe.
800-951-0592. Get your orders placed. Add to that portfolio. Be your own central bank. Jason and I are going to be wrapping it up right after the break. $800-951-0592. $20 gold. $2,115. And again, talk about what all these central banks are doing. Record high demand going back to 1969, right? Think about record high demand. The last time demand got this high, the United States had to close the gold window. There's no gold window to close this time. And then silver, huge sale on silver. Rolls of silver dimes at $110. U.S. Silver Eagles. Jason, I'm looking around. We're cheaper, 75 cents, $1, $2. Some places $4 and $5 less on rolls of Silver Eagles. $730. And I'm talking about $4 or $5 an ounce less, not $4 or $5 less. $4 or $5 an ounce less. $730 today at 800-951-0592. And again, if you want to pay more, just wait a little while, right, Jason?
Yeah, if you're one of those guys that's you just barely can scrape together a little bit of money to get silver once in a while, the dime special today, it could be the last time you see dimes at 110. And we can never guarantee that. Things move back and forth. But it sure seems like dimes at $110 may be the last time you see it here. I mean, it's very possible. So if you've been scraping your pennies and dimes and dollars together to get some silver, this is the one to jump in on. Also, keep in mind, Joe, as we talk about it once in a while, the metals program might be really good for you guys out there that can only put a little bit away and don't want to have to think about it too much. Because I know what it's like to be the guy that you're trying to put as many metals together as you can. I used to be the guy that would go through pennies and pull the copper pennies out of the boxes just to keep my hands busy because I wanted to amass more gold and silver. And you can go to our metals program and start there at $100 a month, Joe, and get yourself into metals as soon as possible and keep it regular, right, Joe?
Yep. 4 deliveries a year. It's a great program. You can go out to allamericangold.com hit the metals button. You can read about it. Our shopping cart's out there. All of the items that we talked about today are out on our shopping cart. So if you're worried, listen, we don't play games. We're not like these other dealers out there. We don't have time to play games. When you call up, you tell us you want the special today, they'll ask you, hey, which one and how many would you like? Right? Hey, who knows? Maybe you want 5 20s, 5 rolls of dimes, and 5 rolls of silver, whatever it may be. I want just dimes. I want all silver eagles. It's just that simple. We don't make outbound calls. If you don't call us, we're not calling you. It's kind of pretty much that simple. We take all forms, all major credit cards, Visa, MasterCard, Amex, Discover. We only charge 2% for those. Again, the cheapest in the industry on credit card charges as well. Obviously, personal checks, bank wires. We've got offices in Arizona and Colorado. If you want to, pick up, you can do that, pay cash. Jason, all the options are available to you.
Absolutely. So today's specials on silver is a great way to jump in. And boy, if we see a slow slide in the market, if it doesn't crash all at once, we may see a slow uptick in gold and silver all year. It's been started for about a month now, right, Joe? Since gold hit its low of 1620.
Yeah, we're probably on week 8 now. Think about it. Silver's added $6. Gold's added almost $245, $250 onto the gold price. And I think that's just the beginning. That was the easy part of the rise. I think the big part is the next wave coming. 800-951-0592. God bless everybody. Jason and I, we got Gene Kuntz on the Half Empty Cup.